Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about some of the common questions we get on, especially for a lot of small business owners that do business travel. The question comes up a lot, how do I prove those business travel expenses to the IRS? I've got Andrew McMillan here with me today. We're going to go over 4 of the most common questions that we receive on how to prove your business expenses to make the IRS happy. Andrew, what can you tell us?
Well, the first question I get a lot is, do I need receipts? So, really the answer to that question is yes and no. So, in general, yes, you're going to want receipts for all of your expenses when you're traveling. So we're talking about hotels, gas receipts, meals receipts, any type of lodging you're doing. All of those are receipts that you're going to want to keep, but the IRS does have a threshold. So if it's more than $75, you want to make sure that you're keeping those receipts. If it's less than $75, it's kind of this area where it's not always pertinent to have that receipt. I still recommend keeping all receipts. I don't really want to hang my hat on that sometimes if you're ever under audit.
And that $75 rule doesn't cover the lodging piece, does it?
It does. So it doesn't cover the lodging
Which if you
piece.
found a hotel for under $75,
not
sure you want to do that anyway.
But if you're looking at the IRS rule, if it's over $75, keep the receipt. But I still recommend just keeping track of all of your receipts.
When in doubt, just keep the receipts.
Yeah. So then that kind of leads into the next question, and you may sound easy, but what is considered a proper receipt? So when we're talking about receipts, we're talking about something that's you want to have the date on there, you want to have where you were, what was purchased, who you were with, maybe what conversations you had. I really kind of look at this through the lens of a meals receipt, because that's a lot of times what I'm talking about with a client. Like if you go have a business meeting with a client and you have a meal, you want to make sure that receipt has a date on it, where you were, your location, what was purchased, and then I usually say, put the client's name, the potential client's name on that receipt. Say who you met with and what was discussed.
Yeah, so I usually a lot of times I tell a client who, what, when, where, and why.
Yep.
And the receipt covers almost all of that except for the who and the why. And I tell them to write it right on the receipt so that way they don't have to keep a log book and things like that.
Yeah, exactly. So, which that kind of leads into the next question is, why can't I just use my credit card statement as my receipt? So, the reason you can't is because not only do you want to show that you bought something, but you want to show what you bought. Like a credit card statement is just going to show that you bought something from Amazon, Walmart, wherever it may be. It's not going to show what was actually purchased. So you want proof of purchase and proof of payment. So the credit card receipt can be a proof of payment that you paid something, but you want proof of that purchase, like what you actually purchased. So if you're ever under the audit, the IRS is not going to want to just look at here's all my credit card statements so you can see that I bought things. They're going to want to know, what did you buy? What was it for? Why did you make this purchase here? So simply just looking at your credit card receipts is not going to be enough.
Right.
The next question that we get asked a lot is, should I keep track of meals separate from my other travel expenses? A lot of times if we're sitting down doing a tax return for somebody, they'll say they had whatever it may be, $5,000 in travel expenses. It's like, well, what makes that up? And it's real important to keep track of your meals separate from your travel expenses, because just as a rule of thumb, the IRS really doesn't like meals a whole lot as a tax deduction, because they only allow you to take a 50% deduction on any meal expense that you have. So this 50% deduction has changed a little bit the last couple years through COVID and the pandemic. They've increased that to 100% deduction, but now in 2023 going forward, you really got this 50% deduction back for all meals that you buy while you're traveling. So if you're keeping track of your travel expenses, definitely make sure to break out the meals portion of those gas receipts, lodging, hotels, things like that, because your CPA is going to ask you. They're going to want to make sure they break that out separately on the tax return to get the correct deduction for it.
Well, very good, Andrew. Well, I appreciate all the information. I'm sure everybody out there does as well. If you are a small business owner and you have questions on how to make sure that your expenses that you're trying to deduct will pass IRS inspection, feel free to give us a call and we'll help you out. Thanks.